Hi, this is Drew Tignanelli. This is our April update, and here with Tom. Bonvissuto means lived well, right? Did we tell people that last time?
We've told them on the radio. I'm not sure we've told them on the video.
All right. And my name means, Tignanelli means head of stone. Yeah, well, my family we're all stonemasons. That's what that's what they tell me it means. I don't know if it's true.
I've looked it up.
Because I can't find any proof that I don't see anything in the Italian words head and stone that line up with Tignanelli.
Yeah.
Whereas Bonvissuto literally means bon means good, vissuto means lived, and
correct.
Good living.
That's right.
Whatever. So.
And we're living well.
And but nothing really lines up with Tignanelli. Anyway, we're here with our April update, and markets are kind of neutral this year. They're up 2% right now, 2.5% depending on what index. Actually, the Dow's down.
Yep.
At this point in time, it's basically flat, minus 0.02. I think I saw yesterday. So, you know, it's like you're seeing tremendous signs though that the economy is improving.
Yeah, I mean, a lot of the data we're looking at, you know, as you've talked about with lending has been good. The railroads have been good.
I mean, lending, Tom's going off the charts. Mm-hmm. Yeah, I mean, it's like a hyperbolic shift upward, whereas it had been flat and then it would go up a little. This time it's like shooting up like this. I've never seen lending go up that much.
Yeah, so the question is, you know, who's borrowing and how's that money going to be used? Because, you know, as we've seen Janet Yellen saying, we're going to keep short rates low. The concern is she's reaching out to middle America, maybe even lower middle America, you know, to try and say, you know, they're not earning enough. There's no wage increases.
There's no employment, you know, for a lot of people in the lower end of the scale. It's really most of the job opportunities are in skilled jobs. Mm-hmm. And so, but the problem is Federal Reserve policy can't solve that issue.
Right.
At least that's my opinion. Obviously, she's smarter than me. She's Fed chairman.
Well, that's one of the problems with the Fed's dual mandate.
Right.
Right. Is, you know, controlling inflation.
Well, what is their dual mandate? You and I know what it is.
Right. So keeping full employment.
Right.
Right. Well, what's full employment? Number one, and then keeping inflation, if you will, under control. So they've set a 2% inflation level, which is probably too low.
Right.
Because of the way inflation's calculated, we are underreporting inflation a little bit, and then the full employment. We get the one number that comes out there everybody hears about, and then there's the underemployed. The guy that's now
guy's 58 and he can't find a job, so he says, "What the heck? I'll just retire."
Yeah, or he's flipping burgers, or he's a Walmart greeter, or something like that. Nothing wrong with Walmart greeters or flipping burgers, but when he was making $100,000 and he's making 30 now, he's underemployed, but he's not showing up in the unemployment rolls.
Right. And as we've seen, we have a lot of clients who come and they say it's not even worth trying, so I'm just going to go on Social Security at 62 and try to make ends meet. Yeah. And it was working under the table and things of that sort. Yeah, you're absolutely right. So 6.5, 6 3/4 may not be the real unemployment rate, but Janet Yellen can't solve that with monetary policy. All she can do, in my opinion, is either inflate the economy or deflate the economy. If she makes a misstep one way or the other, it's going to be ugly.
Yeah. And that's what the markets are wrestling with, is whether we're going to have unintended inflation down the road, because when you keep rates this low for this long, there's
something
that risk
happens.
That there's some kind of a bubble somewhere in the marketplace.
Right.
We've seen the longer rates came down. Actually, we've had a little bit of a rally in bonds. From about 304, went down to the 250s. Now we're back up in the 280 area, and we're starting to see mortgage rates inch higher a little bit as we get into that buying season, as people go into the summer, and people are getting nervous. Rates are going to rise, and they want to get out there and buy a home. We're seeing that just even in the office. People are out there buying homes, and the refinancing wave is done.
Right.
In all estimations. So there are some concerns about what's going to happen with the market. And we saw January was a big sell-off, February was a rebound, March was kind of flat. The last day of the quarter, market was up 0.8. The market was up 1.8 for the whole quarter. So a lot of that happened on the last day. Dividends are making up about 50 basis points, or 0.5% a quarter right now. So dividends are another large component of the return.
Right. And so one of the things we talk about the economy improving, but markets are funny, is that when the economy is improving, that's when the market could start correcting. when the economy is down in the doldrums and the market's already way down, that's when the market could turn around and start going higher, because markets are forward looking. That's what most people can't get into their mind, is you need to buy when there's gloom and blood in the streets, as they say, and you need to start thinking about at least cutting back when there's happiness. Everybody seems to be satisfied, and we're at a place right now, it's 5 years, everybody's getting to the point where they're stock market wizards. They're configured. This is pretty easy investing. You just put it in this index fund. You make 20-30% a year. And so when that type of attitude starts happening, that's when you don't want to run for shelter, but you need to start being much more cautious. That's when Warren Buffett starts accumulating huge stockpiles of money when everybody else is happy, and he spends it all in the middle of 2008.
Right.
So he's just masterful at that in a lot of ways.
Yep, and the market likes certainty. And we've had uncertainty with Putin, what's going on over there. We've had uncertainty with an election year going on.
Well, we have certainty with Putin. We know that he's definitely got different thoughts of life than the rest of the world.
Right, he's going to surprise us, right?
He's a good chess player. I got to give him that. He's playing that game of chess with Barack like a grandmaster.
Right. And we're going into an election year. We're kind of a midterm election. So there's a lot of governor's races and other races going on. A lot of people are dropping out. They're saying, they're starting to say, hey, I'm not going to run again. So that brings greater uncertainty, because there's two new people running for that office, not just one.
Right.
And then, it's just been a lot of uncertainty in the marketplace, and the market doesn't like that. And so that's going to increase volatility throughout, the summer and into the fall, likely.
Yeah. So anyway, we've got a situation in summation where the market's been good for 5 years. People are getting quite content and figure that this is relatively easy now, and that was an anomaly 2008. It's just a time to, we don't see any signs that says we have to run for shelter, but, it's a time that you start slowly being more cautious. You don't have to be overtly cautious, but more cautious. That's, I guess, basically what we've been doing. We're still at, invested. We've got a large allocation in our growth portfolios and more moderate as we go down, because that's just the market atmosphere that we're in right now.
Yeah, you look at the U.S. markets, if you look at the S&P 500, the valuations are fair. So they're fairly valued, not overvalued, and versus the opportunities of cash and bonds, they still look fairly attractive. European markets are rebounding, and we think there's a lot of opportunities there. In China, there's been a little bit of a slowdown, so we're watching that, but we still have...
But that's the gloom, the blood in the street. Exactly. That market's trading dirt cheap right now when you consider it from a historic perspective. Asia looks like it's starting to recover, finally.
Yep.
So anyway, we wanted to talk one other thing, just a general topic about, people who are clients of ours. We talk to them at the beginning that our fee covers all comprehensive advice. But I'm not necessarily sure as time goes on that all of our clients really remember what that means. And when we say all comprehensive personal advice, it pretty much means anything, no matter if you're moving, if your kids are going to college, if you're retiring, if your parents are getting elderly and you're wondering about how do I deal with this, if you're going on Medicare, if whatever the case may be, we're here to provide that guidance to the client, to be that guide to help them navigate through those waters. That's what our firm's name is, Financial Consulate. And a consulate is a place of counsel, and it's a safe haven in an unknown territory.
Right.
So when people have those situations in life, they can come to the consulate and say, hey, you're my comprehensive advisor. What do I do here? What's some things that I ought to be thinking about? We don't replace their specialists, their lawyers, their insurance agents, and so forth, but we're the first place to come to for counsel before they go talk to those specialists about what should I do? How do I navigate through these waters? How do I get through this safely? Because this is unknown territory to me.
Oh, exactly. I mean, that's so important that they have a place to go for anything that comes up, and we see it time and time again where folks call us, but there's also a lot of opportunities. We're just gone through tax season now, and when you go through somebody's return, you find out they got a new job or they've moved, and we didn't have any conversation before that. There were opportunities to do things maybe a little bit differently.
Right.
And so they should call us for those.
Well, right now, any client who does their own tax return can send it to us for review before they file. And I've had a couple clients, certainly, majority of our clients that do their own return or have somebody else do them have not asked us for a review. But I've had a few clients, and I'm working with one right now, and the foreign tax credit was not working properly. And so he's going to come by today, and I'm going to do the return for him to make sure that foreign... I mean, we're talking close to $1,000 in tax savings to get this thing done right. But if he didn't send it to me for a review, he would have never known that he had this issue. So anyway, that's what we mean by it's not just taxes, it's anything dealing with personal finances. That's what comprehensive is all about, right?
That's what it is.
And that's what it being independent allows us to do. Because we're independent, a firm, we can do whatever we feel is absolutely to the benefit of our client.
Yeah, and we've got a lot of resources at the firm. We have 5 CPAs, I think, on staff now.
Mike's not a CPA.
Well, he looks like one. And we have,
he's passed all his tests, though. I give him
right.
that. He's got a couple more credits to get to be a full CPA.
So, we've got that experience. There's just a wealth of experience at the firm. People have come from different places. And because of the number of clients we have, we've experienced a lot of different situations.
Yeah.
So, people call us about something that we've had experience with. We give them, some good advice on that, and sometimes they call us something we haven't heard about. Well, then we do the research, we do the work on it, because if they have that question, it's likely another client has that question. And so, but it is a great first place for folks to go, and then we can direct them to the specialists, to take care of their needs.
And we have a lot of referrals to people that will take very good care of our clients if a client wants to. Yeah. Anyway, we have to wrap up. And next month, we're going to talk about our new office coming up in May of 2014. This is Drew Tignanelli saying God bless.